Let's get in eCLERX. Now, Srinivasan Nadadhur is joining us, the Chief Financial Officer of eCLERX. Firstly, sir, in the second quarter, what we have seen that margin growth has been much ahead of what the street was expecting. More than 390 basis points of margin expansion on a sequential basis that we have seen. Firstly, what led to this, and is this sustainable going forward?
Hi, and good afternoon. Thanks for having me on the show. So a couple of reasons for the increase in margin. One is that we saw a lot of growth in both onshore and offshore parts of two of our three businesses. And that we were able to do while keeping the headcount. The headcount also grew, but we added people at the bottom of the pyramid, which is why you see that expansion in margins. There was also to a lesser degree, a one-off cost in Q1 that went away in Q2. I think these two reasons, primarily growth and the removal of the one-off cost, that has led to the margin increase in Q2. We think for Q3 and Q4, we will be able to hold on to this level of margin that we've been able to achieve. And therefore, for the whole year, therefore, we've increased we have revised our original estimate, which was we had said that we will probably be below the 28% EBITDA margin mark, and we've sort of now indicated that we will be within our stated guide of 28 to 32.
Okay. Globally, if we see macroeconomic uncertainty is still prevailing, but how are you seeing growth to pan out in the second half of financial year? What has been your conversations with clients, and where do you see growth to be in the second half of financial year?
So we see a lot of conversations happening around cost takeout, not so much on discretionary spending. Technology and discretionary spending for us continues to be soft. These conversations are taking longer to close, but we are seeing good traction as far as cost takeout is concerned.
Right, so this is Vinny joining in the conversation as well. Also, I just want to talk a bit about in terms of the revenue growth. Q2 mainly was aided by the financial market and customer operations businesses. How do you see these segments going forward? Second half of the year, what are we expecting, and which segments maybe could be doing well for the company going forward?
So we have visibility for Q3. So I think both these segments should continue to do well. Q4 is when budgets will get revised for most of our customers, so Jan to March. So we don't have as much visibility into Q4. I guess we will get that visibility in maybe a few weeks' time.
Right, and also, sir, in terms of just want to understand with the generative AI, are you seeing a risk in the medium-term growth visibility on that front? It might lead to cannibalization of revenue as well. So, what is it in terms of that? Are you getting orders from Gen AI? What are the sizes of these orders, deals? If you could give us a color on that.
Okay, sure. So we are doing a lot of proof of concepts for our customers, and some of these have converted into opportunities for us. But the size of the opportunity for us is pretty small. We do see that some of these opportunities may lead to reduction in revenue, where other opportunities are net new work. So there are opportunities in area where we don't do any operations work. It's hard to predict what the impact of Gen AI is going to be over a medium-term period. In the short term, we don't see much impact, but kind of very hard to predict what is going to be the impact over a medium to long-term perspective.
If you see the European market now, that has continued to remain soft. Even in second quarter, if you see on a sequential basis, it has declined by around 1.8%. Are you seeing any signs of revival so far in Q3, and when do you actually expect any signs of revival to come in?
So as you rightly point out, European market continues to be soft, and that's what we are seeing as well. Some of our large clients in the luxury segment announced results, and because of slowdown in China, that has been a little soft. So I would say Europe is going to be constrained for maybe 3 to 6 months at least.
Right, and also I just want to understand in terms of headcount, what is how outlook looking like for Q3 in terms of headcounts? Where is that headed?
So we continue to add headcount as we are winning some of these takeout deals. So I think it should be Q3 headcount should be higher.
Okay. I don't know whether you would be in a position to answer this or not, but the new CEO Kapil Jain, by when is he expected to submit his plan? And are you seeing any structural changes in the organization post his appointment?
So I can answer the first part of the question. So he's expected to submit his plan to the board in Q4, and subsequently we will share some parts of the plan with the wider investment community as well. At the moment, it is hard for me to comment on what structural changes he will make. I think it's best if he shares that himself.
Lastly, you have around 900 crore of cash in your books. Any plans of acquisitions? Are you in talks with anyone currently? And what would be your criteria even if you're looking out for an acquisition?
So we continue to look at assets that will be valuable to us. The 2 or 3 areas in which we would like to get assets would be one, analytics. Second would be in non-voice customer operations. And I would say that some of these things take time to work out, and it's hard to predict whether we'll be able to close anything soon or not. But conversations are going on.
Okay, conversations are going on, but yes, we'll watch out for that. And thank you so much, sir, for joining in with us this afternoon on
Thank
80
you.
Now, giving us an understanding in terms of what we should be expecting from the company going forward as well. That is Mr. Srinivasan Nadadhur, CFO at eCLERX.